then get your interest from Standard Bank, you withdraw your money, and you put your money back into the bank that you borrowed it from in Japan, and you bank the difference. That difference is called an ARB. And a lot of people do that with Bitcoin, for example. And I'm going to take a few minutes to talk about crypto because I haven't forgotten about it. Don't worry. It didn't get a mention on here, but it's still definitely worth even discussing in the growth section of well, you could call it in the depends on the week. It could be value or growth with Bitcoin, but you never know how it goes. But it certainly got the people excited, and it's giving. I mean, I'm not one of those Bitcoin disciples by any stretch. I do own Bitcoin, I do own Ethereum, but I own it more as a speculative investor who sees the market of crypto as yet another source of other people's money I can take. That's really what it is to us. Because the principles that we have always employed on the stock market so readily apply to the crypto market and to pretty much all what are referred to as fungible securities. So once you get a skill in one fungible security, you essentially have the skill in all fungible securities. So what is a fungible security? If you look in your wallet, you'll find a 10 Rand note. That 10 Rand note is fungible. If I borrow that 10 Rand note from you and then I go to John and I get another 10 Rand note and I give you John's 10 Rand note and I give John your 10 Rand note, everyone's happy. Nobody cares if they got their original 10 Rand note back as long as they got a 10 Rand note. So stocks are exactly the same. Stocks are, I don't care if I buy this Apple share or that Apple share, as long as I've got an Apple share, they give me the same rights per Apple share. Everything is exactly the same. If I'm rich or poor, it's my Apple share and it gets the same right as Tim Cook, the CEO's Apple shares. So that's a fungible security. Bitcoin is therefore obviously also a fungible security. A house is not fungible because if I give you my house and you give me your house, we're not necessarily going to come out. One of us is going to be a winner and one of us is going to be a loser, however that works out. They're not exchangeable. An ounce of gold is fungible. You don't care as long as it's 100% gold, 24 karat gold. If you give me 24 karat gold and I swap another block of 24 karat gold with you, no one's worse off, no one's better off. Okay. So if I can master trading currencies, which are fungible, then why can I not just walk into the stock market, do some adaptation, do some sort of continuous learning, but I won't have to relearn everything. The support level is still a support level. It's not necessary to go rehash the entire thing all over again. And then because I'd obviously been trading stocks long before cryptos ever existed or ever became a fad, as soon as the new market comes to you, as an investor, you look at it and you go, oh, look at all this stupid money that's floating around in that place. It's like a land of plunder. And then you go in there and you just take some of the bucks. But you don't have to be a devout believer in crypto in order to capitalize on crypto markets. Maybe you just have a little bit of crypto, and then the rest of the time you're actually just out trading the other traders. I don't care if I make money on crypto, currencies, bonds, stocks, commodities. In the end, I get fungible money. That's all that matters, is increasing your net worth over time. If you continue to increase your net worth, then your net worth will forever take a larger amount of the effort of increasing. So you're trying to make your net worth rise, and your net worth's trying to make your net worth rise. Money makes money, and the money makes money. Okay, so you'll have also heard about a concept like backtesting. Backtesting is very common in statistical trading. It's a case of trying to see if a model that you would hope to employ in the future onto the market would have worked had you done it in the past. So you go and get a machine to apply your rules retroactively to a series of trading that has already occurred and see, had you done that, would you have been successful or would it have been a catastrophe? You obviously need an enormous amount of data to deal with this particular form of investing. It can come in various forms. It can come in the form of market data, alternative data, economic data. You can use a number of different programming languages. Python is by far the biggest in the financial industry at the moment. I think that as far as future employment prospects, Python is an extremely useful tool for anyone who's looking to get into like higher finance. And I mean, you can only imagine you don't get a lot of higher finance in the whole world of finance than a person who can program Python algorithms into statistical, speculative security models. I mean, you work out how to do that right over the long term and you'll be very successful. But I really can't express enough how it is totally unnecessary at any point in your career for you to even look into this level of complexity. You would still be able to make a vast and terrible fortune using the previous principles we discussed. This is more about refinement. It's about a perfect, beautiful process mathematically. It is a very academic way of doing things. So if you are so inclined, which I'm sure most of you would be, it's an area that you will never master. It's just like statistics, really, and mathematics. You can study it forevermore, and by the time you die, you probably know 1% of the laws of the mathematics of this world that we live in. And the same is true of stocks. So unlike a closed science like law, you can read the book, and if you can remember the entire book, you know the law. And no one can ever argue with you about that. But with trading, you know, I've spent tens of thousands of hours on trading in my life, and I probably know 1% of it. And I've done quite well with my 1%. So you don't need to go out there and like completely have a total understanding of like a divine level of understanding of markets. And also be careful not to project that estimation or that assumption on the other players. Some guy sitting in Wall Street more likely to be schnaufing a line of coke right now than he is doing actual research. You have a lot more potential. You are a lot more nimble than them. They are subject to prudential requirements. They are subject to being usufructs. They are subject to taking on responsibilities. They are custodians of wealth. You are none of those things. You want to get out tomorrow, you don't need to care about whether Bud Light is giving a positive message or whatever. If you don't like what you're seeing, you're out. You're not going to move the stock with your volumes. You're not going to desire to buy a stock that is of such a massive volume because you're so stinking rich at this point that you can't get enough of it. There isn't enough available on the market. Or alternatively, you won't be struggling to get out of a stock because, I mean, imagine if Warren Buffett decided that he wanted to sell his Coke. Do you think he can just go to the stock exchange and just like casually dump all $500 billion onto it? He's got to wait for weeks of trading activity. He's got to forewarn the market so that they don't panic, thinking that he's selling out of some insider information that he's got. It's this whole process. You know? We can just chuck whenever we feel like it. And I speak of this often regarding the modern world. In the old days, it was that your assets made you rich. Today, it is cash that makes you rich. Today, it is how nimble you are, how liquid you are, and how capable you are of dealing with financial shocks. Those are the things that destroy your journey of wealth in life. It is not that you will not earn enough money. It is not that you will not have enough to survive. The difference between whether you achieve true financial prosperity, true power over your life, and true conquest of the systems within which you live, you'll get to that place psychologically and financially through markets. It'll take you a long time to truly master it, but you will be in a totally different level of sophistication and exposure to opportunities to everyone around you who's not involved. You will forever have a structural, embedded advantage over them. For example, stock markets are pretty much the only asset class in the entire world that exclusively benefits from inflation. Now, everybody who's ever told you anything about inflation tells you about how it wipes out your wealth. And we're all getting eaten by the inflation. And we're not going to have any money because of inflation. Those stocks that we're talking about are the very stocks that are selling you the products at the inflated prices, and as a result are getting commensurate increases in their revenue, and their prices are rising. Compensating for your more expensive bread is your super well-priced asset, which is infinitely more important. And you can turn that thing into money instantly on the market. You are nimble, you are liquid. You can move things around, shift things around, capitalize, do it all, quick sticks, and the facilities that are available now. Back in the old days, I used to phone my trades in. I mean, come on. I mean, now you can open an easy equities account, or you can go onto a virtual account like you have here, and you can just, the whole world's at your disposal. And you don't have to, try to earn your way all your life, compete, do the whole process that everybody told you to. Everybody's got to have a side gig now because the world's getting so expensive that, now it's the goldfish, the dog, the baby. Everybody's got to work. Everybody's got to have a side gig. And I know some very successful people. I mean, they really have it together. They did the whole thing that everybody told them to. Happy marriage, good job, got the house, got the dog, 2.5 kids. It's all cool. And they're struggling. They're really struggling in the real world. They're struggling because they're doing the right thing in the wrong place. You don't have to become a professional trader to take advantage of the stock market. It is simply another avenue of investment, and everybody should be investing. I don't expect everyone to carry my level of passion about the markets, obviously. But I do expect everyone to understand the need to invest, to subsidize their income, because you will never earn enough to prosper. You will suffer from the standard Western problem of lifestyle creep. You will experience problems in your life that are health related. You will try to have a little emergency fund, and everyone will tell you to save, save, save. Saving is not the way to get wealthy. Why? What is the way to get wealthy? The wealthy way is investing. What is saving? Saving is to not invest. Saving is the opposite of investing. Therefore, saving is the opposite of the path to wealth. You will never, ever, ever save yourself rich. If you learn this one little thing, it will change your entire life. It is infinitely easier to make 100,000 Rand than it is to save 100,000 Rand. Change your mind into one which creates instead of one which competes. And these laws, not these opinions, not these hopes, dreams, and aspirations, but laws of the world that we live in that carry over into all of the systems that we have built will work in your favor, and the very things that have turned you into a slave and your parents into a slave will give you power. If you only come to understand yourself and how the market affects you. You only have to master yourself, and you will have a massive advantage over the rest, because 99% of the people who trade stocks are the mob. They are mindless. And the rest of us just watch them get scared out of markets. If they can't scare you out, they'll wear you out, but they'll get you out. They want your assets. They want to buy them at discounted prices. People like me want to buy them from you while you are panicking. You will give me your golden goose. And when the true, obvious truth comes to light in the future, you will regret selling that stock, or you will regret not buying it. And the people who could see the signal through the noise, they will become wealthier than everyone in their social group. Because you're going to get an edge by doing this. It doesn't matter what your friends do. They got no chance in hell of catching you if they're not on this with you. This is the highest form of investment, and you are business students. There is no more profitable, more impressive place you could possibly be. And if you learn a little bit, just a little bit about this, it will vastly increase your capabilities as a business person in the practical and the real world. And, I mean, if you do really well, then it'll do a hell of a lot more than that. Anyway, let me canvas at some stage so that you can rest, so that when you go back to Varsity College on Monday, you will have had a bit of a gap. Yeah, I'll chat to Megan, but she'll be taking over now. But I just want to let you guys know, if there's anything you need, you're very welcome to. You can WhatsApp me. I don't mind. You'll never be bothering me. I can help you guys. Anything you need. I'm happy to have personal chats. And yeah, you guys can drop any random questions. You have asked questions throughout, so I won't give too much time to that if there's not much going on. I think I've covered most of it. I'll give Megan this spreadsheet as well, just so that you guys can all use it. It's going to be exactly the same one we're looking at now. Like I say, I mean, it's sort of a skeletal structure of what those different ideologies involve, but obviously it's very nuanced, and you could read the same sentence and take a totally different thing from me. That's why trading is so awesome. There's no one who's right or wrong. They often say you're either rich in trading or you're right. You get to sound clever or you get to sound rich. I'd rather be rich. But you'll learn so much about yourself. You wouldn't believe it. It'll teach you every single thing you need to know about yourself for the whole rest of your life, about every other aspect of your life. It'll teach you how you react to panic. It'll tell you if you're a coward. It'll tell you if you're a warrior. You can't fake it. And whatever you get out of this, you'll be able to look at a number. You'll have a quantifiable, absolute, definitive outcome, not an opinion. You either did it or you didn't. You either made money or you didn't. But you'll be able to do that 1,000 times every single week until you've done it enough times that for the most part, it turns into your little money machine. And then it'll be with you for the rest of your life, giving you a reason to learn about the world. And what's incredible is that all of this funny money that we talk about, these numbers, and they're really just numbers. I don't know why, but for some reason, you can go to this golden city, this like imaginary place. And from this imaginary abstraction, you can pull anything you want. You can go to that place and you can come back with your dreams. Always think about that when you go onto the market, when Mr. Market knocks on your door. This is a limitless place. And the only part of you that's limitless is your mind. So if you put them together, you don't have to think in any way but endless potential. Okay, I'm going to hand over to Megan now. Oh, let me check out questions. Thank you, Keshni. Thank you very much for that. I appreciate you. Yes, I am very enthusiastic. And this is the thing. I've been doing this for a long time, so you must know. There's a lot to be passionate about, because most things it would have worn off. Most things. If a company is wanting to delist and you hold stocks, what happens if you don't agree to the buyout price? So what will happen is every time a company is going to delist as the result of a buyout, it means that another company has come in and offered to buy the business. So that company will present their offer to the board of directors of the company that you own. That board of directors will then be tasked to look at that information and present it to you as shareholders. They will then be told to give you an opinion. So the directors might say, no, this is a terrible deal, but we had to tell you because it came, and we have to tell you about the deals that we get offered. So we think this deal sucks. And we're going to go back to them and we're going to say they need to up this by like 30%. If they come back and they tell the directors, okay, we'll up it by 30%, then let's say, for example, the directors went back to the shareholders and they say, okay, they're going to up it by 30%. Now they've convinced enough shareholders to vote yes. If the shareholder votes past a certain threshold, I think it's 75%, then it doesn't matter what you think if you voted against it. You're going with the crew, and you will find that your share will vanish in your portfolio, but it will also luckily transform into money. If you own, for example, like Mark Zuckerberg or Elon Musk, if you own the majority of the shares, then no one can ever force you to do anything. They can't even force you off the company's board. Shareholding is the ultimate power of the world. It is the truest thing. It's the same as if you own a piece of property. The only difference is you don't really own your property. That's why even if you own your property and the bank has long since stopped pestering you for your interest payments, you will still pay property taxes to your government, which means that property is not actually yours. What is yours is your share. No one will ever ask me for anything, ever, in my entire life, if I own a share. It doesn't obligate me to do anything, ever, under any circumstances. And I can do whatever I want with it whenever I want. And once I've done that thing is forever. No takebacks, nothing like that. It's done. It's instantaneous, it's ultra liquid, and it's permanent, which is very, very different to traditional daily business that the rest of us conduct in our daily lives. Yeah, no, the vote process is not tedious. What happens is you get a little document in the mail, or alternatively an email. Back in my day, they used to send them by homing pigeons. Then I'll reattach it to the homing pigeon and send it back to the company, and then they will put it on the register as my vote. And that's that. And then if I'm outvoted, then sorry for you, bud. You're going to have no more share. But you will find that, remember, these shareholders that you're voting with, they're in the same exact boat as you. They want the most money they can possibly get. So for the most part, if your share delists as a result of a buyout, you'll be happy about it, because they probably push them up another 50% on your trade. So you're probably going to close your trade at a minimum of 80 to 100% profit on a buyout. If it delists because it went bankrupt, you're on your own, bud. No, that's listed.
Okay, guys. Okay, it has been about 3.5 hours. I take that back, nearly 3 hours and 40 minutes. If you guys have any further questions, please feel free to like open your mics or pop them in the chat. Otherwise, please enjoy the rest of your Saturday. We will have one of these masterclass. We're going to try and do them once a month. At the end of the month, I will get your statements and your confirmations of your share purchases out to you by Monday. And then obviously your confirmations will be a lot quicker in the future. You just have to build some backups into those IT systems. But otherwise, have a wonderful weekend. Thank you so much for taking the time. It really does say a lot about you guys. And thank you so much, Michael, for your time. This was really incredible. I also learned so much and hoping to see how we employ it in the market, especially the US market. It's just like Gaston pointed out, so much more profitable, so much easier to trade. So we'll have a lot of fun this year.
Good luck in the competition, guys. Remember, be brave and believe in yourselves and think independently. Have a blessed weekend and a nice chilled out Saturday. Remember, nice websites to look at today would be investing.com. You could start there. It's an excellent website. And then remember to practice for your competition. And also, if it all goes well, you're very welcome to chat to me. We get you up on some real life accounts so you can take this to the next level.
Sorry, Zachariah, I realized I could just open my mic. So your funding will obviously carry over. The idea is that you don't get access to all million in the first month and then deploy all your capital. So we want to just give you the opportunity to like learn every month and then deploy your capital and then sort of reap the benefits of your profits over time. But you will have access to all your money by August is the third phase, and that's where we give you access to $500,000 so that you can do your most impactful investing in the last, 3 months of the competition. I'm right there with you, rather be there. It takes a while. They always say your first million is the hardest, but well worth the effort. Absolute pleasure, guys. Have a wonderful weekend. Thank you again for joining. And we'll see you next month. Keep trading. Good luck. All the best.